In today's video, we'll be discussing stop loss orders. What are they and how can a trader use them? Well, as the name kind of entails, the idea behind a stop loss order is to stop out of positions that go against a trader based on the criteria that you set with the stop loss order. To keep this really simple, I think the best way to demonstrate is through a visual representation. So I have this small 0.01 sell position on the British pound versus the US dollar. And let's say that I think that this market can move lower, but what should I do if I am wrong? Well, the trader may choose to use what is referred to as a stop loss order. And if I click on this green position, the sell position that I'm in, and simply drag this red line, you can see on the left-hand side of my screen right now, see that SL minus $9.24 and the 924 number there as well? Well, if I release this, what you can see is that I now have a quote unquote stop loss order. I'm using MetaTrader for demonstration here, and you can see it's denoted with this SL. Now, what this stop loss order is doing now is it is currently waiting to see if it gets triggered, essentially an order out in the market that will say, if price goes at or above this line at any point, close out of the position at the next available price. Now, why might a trader choose to do this? Well, depending on your strategy and style, you may choose to use a stop loss if you want to mark a point where you are no longer interested in being in a particular trade. So in this case, let's just say that I no longer want to be in the trade if we break through the prior highs here and we move higher. At this point, the stop loss order that I have entered into the market will trigger me at the best available next price anytime we are at or above this level here that I have denoted with my stop loss order. I can right click the order and click modify, and this populates open my order window where I can modify this at will if I'd like to. Now, of course, traders can also use what is referred to as a take profit, which is the same idea, but instead of stopping out of a losing trade, this is telling the market to close out a winning trade anywhere at or below this level. Now, in this case, we are talking about a sell trade example. We would reverse this if we were talking about a buy trade example. So just for a visual on that, let's just say that for whatever reason, we are in a long position or we have bought the market. So we are in a buy trade. And in this scenario, if we were to set a stop loss below current price, we could call this our stop loss level just as an example. The idea would be that if the price broke at or below our stop loss level, our order would fill us at the next available market price at that time. It is important to disclaim with stop loss orders that stop loss orders are not a guaranteed order fill at the exact price that you set them at. Rather, stop loss orders are simply orders to the market to fill you at the next available price, whatever that price may be. If a trader is worried about getting a specific fill price, a trader may choose to use a stop limit order. A stop limit order is a type of trade that combines a stop order and a limit order, specifying both a trigger price and a limit price. When the stop price is reached, it becomes a limit order, so the trade will only be executed at the limit price or better, unlike a regular stop order, which becomes a market order. This gives you more control of your execution price, but risks the order not executing if the price moves too quickly past your limit. Coming back to our visual representation, keeping things really simple, a stop loss order is essentially an order that you put out in the market intended to protect you from a larger loss if the market were to continue in an unfavorable direction to a trade that you've chosen to take. In this case, if the British pound versus the US dollar appreciates considerably and I stop out of the trade, the stop loss did a great job at protecting me from the risk that I would have taken holding past that point. However, we should also talk about stop loss placement, as this is a very critical conversation to have when using stop loss orders. Some traders may be familiar with stop losses and the frustration that can sometimes occur when a stop loss order is triggered just in time for the market to go back in the intended direction. Very frustrating and most traders can relate to this. Stop loss placement is something that takes a lot of practice, a lot of backtesting, and a lot of work to refine your skill at. A few concepts that a trader may choose to look into is technical analysis and support and resistance specifically to identify areas where we could potentially look at stop loss placement closer. For example, in this case that I showed you here, we noticed that price rejected around this current area and moved lower so far. In this case of where we put the stop loss, putting the stop loss above this prior high suggests that if it were to break through those levels, that perhaps the bulls are very strong and it may be a time to look to get out. Of course, it is definitely suggested that you spend some time doing some research and homework on this before making a decision on how you want to place your stop loss orders. Stop loss placement depends on your personal strategy, your personal risk tolerance, the time frame you're trading, and so on. Overall, stop losses are intended to be a way to protect your account through the use of risk management by defining the risk that you're taking on a particular trade. As always, you should be very familiar with how much risk you're taking on your trade and be comfortable with the risk that you're taking, remembering to always risk appropriately. I hope this video was helpful and consider subscribing for more videos in the future. Thanks for watching.